The Canadian economy has been stagnant. As per the latest economic data from Stats Canada, the economy grew by 0.1% in the month of October, and much of that growth came from the services sector. Plus, we saw a record amount of immigration numbers published by Stats Canada again, and according to them, the immigration has gone up to 850,000 people in the year of 2022. Plus, we also received the fine print of the foreign buyers ban, which is coming into effect on January 1st, and there are some exclusions in it as well. So what does it mean with regards to the housing market? What does it mean from an economy perspective? I'm gonna break it down, all of this for you in this video, so let's go. Alright, welcome back. My name is Yasin Nizami and I make these videos to educate my audience about the real estate market in Canada, particularly in the GTA, as well as some macroeconomic factors, some geopolitical situations, some investing strategies. So if you're interested in any of these topics, consider subscribe, and let's get back to our topic of the day. So the economy has been stagnant, right? So Stats Canada is saying that the economy only grew by 0.1% in the month of October, and much of that growth came from the services sector, like retail. Air industry has been one of the leading sector contributing to GDP growth, but the manufacturing sector, which is where the goods comes from, has been declining, has seen a slowdown. And of course, this is also as a result of the economic and monetary policy, which is basically raising the interest rate aggressively, which, by the way, we haven't seen the real impact in the economy yet, because typically when the monetary policy is changed, you really see the impact in the asset markets immediately, like stocks and real estate, but it takes almost up to 12 months before we really see the impact in the consumer market in terms of the consumer spending. So I think we haven't seen the real effect as yet, because the Bank of Canada is still hiking their rates, and we will only see real impact sometime in 2023, most likely in the second or third quarter of the year. The interest rate is going to be a deciding factor for the going forward economic growth as well as the housing sector, because at the end of the day, the debt level has been so exponential. So the Canadians at a household level has accumulated a lot of debt in the last few years, and according to Stats Canada, the debt to GDP ratio has been 183%, which is quite high. Consider that, if you earn $1, you have $1.83 of debt to service. So that's quite exponential. And consider if the rates stay at that level and the consumers renewing their mortgages or refinancing their mortgages at a higher level, that becomes a very difficult debt load to sustain from a going forward basis. And if you add the job losses onto it, because job losses is going to happen, keep in mind, because the way the economy is moving, we're seeing a lot of job losses happening across the tech industry, and those numbers have not been reflected in the unemployment data yet. So I think come Q2 or Q3 next year, we will see the job losses will go up, the unemployment data will go up, as we see the real impact of this monetary policy working through the economy. At the end of the day, the interest rate is going to be a determining factor in terms of the economic growth going forward, as well as the housing sector. According to David Rosenberg, one of the leading economists, 50% of Canadians' wealth tied up with the real estate market. So if the real estate goes down, their net wealth shrinks as well. And when that happens, you actually feel poor, which is basically the wealth effect, which directly impacts your purchasing power and spending power in the economy. So all of this combined together, rate hikes plus higher debt level plus job losses, the wealth effect, negative wealth effect, it's going to contribute into the lower consumption in the economy, which will definitely slow it down, and most likely we will head into recession. Now, on the positive note, the higher interest rate giving you an opportunity to save more. So things like GICs and other saving certificates becoming a very attractive instrument in terms of getting some return on your cash, because if you look at the equities, if you look at the real estate market, they all are in turmoil right now. So right now, if you are an investor and have cash sitting aside, you can definitely invest into GICs and any savings certificates. So we finally saw the fine print on the foreign buyers ban, which is coming into effect on January 1st. And according to that ban, there are some exclusions in it. So of course, if you're a Canadian national, if you are a permanent resident, you are excluded from that ban. If you are a student on a student visa, but you have been living in this country for the bulk of the last 5 years, you can still buy the property, but only up to $500,000. If you are a temporary work permit holder and you have been filing taxes in the last 3 of the remaining 5 years, then you are also exempt from this ban as well. Plus diplomats, consular staff, any international organization members, they're also excluded from this ban. Plus, if you are a refugee, like asylum seeker or coming in on a refugee status, like a lot of Ukrainians came into this country this year, all of those people are excluded from the ban. So the ban itself is not going to have a material impact because it is excluding a lot of temporary workers and student community, and much of those people were the buyers in the recent housing speculation. So I don't think this ban is going to have an enormous impact, but of course it will block the newcomers coming into this country on student visa as well as temporary work permit will be banned from buying real estate at least for the next 2 years. I think the real impact is to be seen, but at the surface of it, I don't see there is a huge material impact coming into the market as a result of this ban. By the way, the market is already very slow, and we don't have a lot of sales volume and sales activity happening in the market anyway. So this ban is coming into the market at a time where the market is already so slow, and I don't think this will make any significant impact in terms of the market activity. Maybe symbolic, maybe some FUD created in amongst the buyer, but I don't think this will have a major impact on the market. With regards to the immigration, we saw the latest stats from Stats Canada. According to them, the net immigration in country has been 865,000 people year over year, and that is a significant number. Hands down, that is, we haven't seen that growth in the last 2 decades. But keep in mind that there was a dip in the 2020 and 2021 where we haven't seen a lot of immigrations coming into this country. So we are actually catching up as well. So there are certain factors to consider. So a catching up factor from the pandemic time. Plus we have seen a lot of refugees coming in from Ukraine in this country. Plus of course a lot of students who were studying remotely for the last 2 years. They're finally coming into this country to be to feel the campus experience, which has been absent for the last 2 years. So combining all of these factors, of course this number is quite high, but there are some reasons behind that as well. So of course this is going to create a housing impact from a rental perspective, but I don't see this is a bullish signal for the real estate market in any shape or form, because most of those immigrants are not going to buy immediately. They will definitely rent the property, so the rental market will continue to drive up the prices. But from a buying and selling perspective, I don't see this immigration will have any major impact in the foreseeable future. I could be wrong. Let me know what you think. Put your comments down below. That's it from me for this week, and if you like it, give me a thumbs up, hit subscribe, and share it with your friends and family, and I'll see you in my next week video. Take care.